Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to talk about the economic data, how it impacts the overall markets with some market analysis, maybe sprinkle in a little geopolitical fodder to round that all off, and then talk about some option strategies we could implement into a portfolio based on those assumptions we're coming up with in these videos. All right, so let's talk about the economic data across the pond. Really not a whole lot going on there. We talked about it being a European holiday yesterday. It's going to kind of probably be a bit of a hangover today on the volume side. Plus, we're heading into a holiday weekend here in the United States, probably going to lighten up after 11 o'clock or noon Eastern. So it's going to start being a rush to the Hamptons in the summer. And this is the kickoff party. All right. So other than that, though, we do have Ballard speaking a little bit later on as well. Or actually, he spoke earlier this morning. Not really a ton about monetary policy other than some sprinkling in some geopolitical stuff for Davos or about Davos. Then we also got what I want to get to here is personal income. We've been talking about how wage inflation has been driving some of the inflationary aspects around here. If we're going to see wage inflation, we also want to see some of that spending going on. Well, we're seeing the spending, personal spending coming in at 0.9%. They also revised last month's number higher, expected to be 0.7. They also got personal income. That came off a little bit, 0.4, expected to be 0.5. Then we got core PCE price index up 0.3%. But when we get to PCE year over year, it did dip below 5% for the first time, but it came in at 4.9%. So not a real parade from inflation necessarily, but good to see that we're starting to see maybe some of these inflationary aspects be a little bit more transitory. Wholesale inventories ratcheted up just be it a little bit, 2.1%, pretty much in line there. One of the other things, though, we saw the trade balance finally start to come off a little bit, something we don't normally talk about here because we are usually an importer of goods. That kind of hurts GDP, but we're starting to see some of the exports pick up here a little bit. So the trade balance, negative 105, expected to be 114. Last month, if you remember, it was, I think, very close to a record at 127. Or negative 127 billion. All right. So that means we are importing more than exporting. When we see that number ratchet back down, that means we are exporting more than we are importing. Now, what's making the overall markets make the moves today? I think it's more so that yesterday we had some economic data, remember, late in the day, and most of that was pretty bearish for the overall economy. We saw the pending home sales come off dramatically due to the higher interest rates, most likely, or the fear that the interest rates are going to be moving higher. That we got a big rally out of the equities. Why? Because it's a little bit bizarre right now. We've talked about this before. What is going to be the catalyst to break us out of this negative pattern here in the equities? Well, we needed some really good economic data maybe to break us out of it. Or what did we get? Some really bad economic data. That could be the catalyst as well, folks, where the market starts celebrating the fact that we might not see this ratcheting up of the interest rates as quickly as we originally believed. So that will give a little bit of a rally there. So are we going to be able to sustain it and stay above some of these key levels? Let's take a look at the markets here real quick and we'll decide. We've got a resistance area right here around 115 in the crude oil futures here. I'd keep an eye on that. If you're trading around crude oil, this is going to be a real determining factor as to how the economy works as well. But we got a bit of a top there. Maybe we'll get a little bit of a pullback. I would be looking for something like downside risk here in crude oil right now. Now, bonds, while they're kind of hanging out here, and we'd love to see these markets start to move higher because the equities are going to celebrate lower interest rates. I think that the bonds, the price has got to go down from here, which means higher interest rates. It's going to start rolling over here, especially if we start seeing a little bit more of a rally in equities. Gold futures just kind of holding on to 1,850. Not really anything to see here. I'm expecting to see gold start to move higher on the expectation. I think we're going to see higher inflation, but seeing it ebb a little bit here could cause gold to lose a little momentum to the upside. Bitcoin just not in the news right now. Not a whole lot of talking about Bitcoin. I think it's going to start to suffer from that, and the downside pain is not over there. VIX coming off, and that's because we're continuing to see these pops here in equities. Again, line in the sand, we were talking about needing to settle above here. Let's call it 12,550, something above that number there. 12,600 is easy settlement for a confirmation for breaking the lower low, lower highs pattern that we're seeing here recently. Now, if we look over at the Dow Jones Industrial Average, we can see that we did break above that key level there to try to break those lower lows, lower highs pattern for that bearish sell-off here. Now, again, we need to see the settlement above, let's call it somewhere around 32,700 is a good settlement to get that pattern to break. Now, we're trading right above that area or right around that area right now. We need to settle at the high end there for that to happen. Now, day's not over. We could rally up and settle back down here close to, let's call it 32,500. That would be that we're continuing to roll over and looking for another new low there. So today is going to be really key to set up for next week. Now, something bizarre has been happening recently with Fridays. We're seeing some buying pressure coming into Fridays, which is a little bit odd to me. I think that people would be wanting to take some risk off heading into the weekend, especially with as much unknown has been happening in the overall economy there. So keep your eyes out for today, late in the afternoon, how the market reacts. One thing is, I think we could see a possible positive settlement here, a bit of a rally into the close as we start getting that rush to the Hampton, some of the institutional money leaves, and then the retail investor is left there at the end of the day buying. So we could see that happen as well. E-mini S&Ps have a little bit more room to the upside to get that settlement. We're going to be talking about 41,000 settlement in the E-mini S&Ps to break that lower low, lower high bearish pattern there. And we can see that we are pretty strong coming into today. Overnight inventory, I'd say, is relatively flat, but it looks like we're going to kind of open up here right around that line in the sand that I was looking at, 41,000 here in the mini S&P. So that's going to be your initial balance. Anything trading above that is going to be very bullish. So keep your eyes on the initial balance today for trading. Now, with that said, I'm going to keep my eyes out, sitting on my hands right now, adding a little bit with selling some puts. As you guys know, I've been trading stuff like that. But we've got those trades on. We're going to work through that inventory. And hope you guys have a great weekend. If I don't talk to you, you can't take that. Take it easy.